All right. Welcome back to the Know Your Numbers podcast. I'm your host, Chris McCormack, and today we're going to be covering a continuation of the topics discussed in the previous messages. We are doing a deep dive in our latest ebook, The 6 Keys to Increasing Your Real Estate Revenue. So if you've been with us 2 weeks ago, we covered an introduction to it all. We went through and named the 6 keys, and now each week we're going to go deeper into each individual key. So last week we talked about the importance of good financial records. You heard some stories about clients we've had who came to us with messed up financial records, stress around the IRS, and just keeping everything in order. And the end result that came in the form of peace of mind and tax savings as a result of having clean financial records. So if this is the first week that you're tuning in, I would encourage you to go back and listen to the previous 2 episodes. Again, the introduction and then the deep dive into key number 1. Today, we're going to be diving into key number 2, which has to do with the importance of having processes and procedures to follow, as well as checks and balances and internal controls. Internal controls specifically is a topic that is familiar to a lot of accountants. I myself was in the audit field for a little bit at PwC, one of the big 4 tax and accounting firms out in Boston. And we dove deep into internal controls with some of these big businesses. And I quickly found out that if it works for the big businesses, we need to make it work for the small businesses. So one thing that we're going to be making clear to you is that it is necessary to have internal controls, and this will come in many shapes and sizes. And then the second part of key number 2 is the importance of having a regular process to ensure that you are staying up on clean financial records and tax strategy, right? So now we're assuming that you have your financials in order, and now it's like, okay, how do I keep this ball rolling? How do I keep the wheels turning to make sure that I don't fall back into the old practices, right? Because if you are familiar with the show, The Biggest Loser, right? I grew up watching the show. There would be a lot of people that would go in and lose a ton of weight, hundreds and hundreds of pounds. And then there were often stories about them gaining the weight back soon after the show was over. Maybe it was a couple months, maybe it was a year, but more than anything, these guys lost a bunch of weight, and then, as far as I know, they gained it back more times than not. And it's similar to if you win the lottery, right? A lot of times people who win the lottery end up going broke a few years down the road, and it's because they have this newfound peace of mind, this newfound money, newfound confidence around their finances, newfound freedom with their body, and yet they don't have the habits that will make sure that it lasts longer than it does if they go back to their old ways. So it's no different in the world of accounting and running your business as a financial enterprise, right? You need habits that will make sure that you're taken care of for the long haul, and we'll be covering that here today. Before we get really deep into the message, I want to thank you for listening, and I want to encourage you that if you get any sort of value, or maybe you know somebody who is stressed out around their finances, or maybe they just got their books cleaned up and they're not sure what their next step is, go ahead and share this with them. We know that many real estate investors are facing a tough time. They don't really know what decisions they need to make right now. Should I invest in that next property? Should I clean up my books? How should I approach these few important decisions? And ultimately it comes with confidence, and you get confidence by getting the right advice. So go ahead, give us a 5-star rating and review, and share it with a friend if you get that high quality value that we so earnestly desire you to receive. So today, the second key to increasing your real estate revenue comes from having proper internal controls and regular processes that you can follow. So I talked about it a little bit when we went into the Biggest Loser competition and the lottery winners, right? These people get this big solution to all of their problems, or so they think. And then you fast forward a couple of years and their problems are bigger than they were to begin with, because they had the solution and now they're back where they started. And there's no worse feeling than knowing that you took a big step towards progress and then you decreased or went down back into your old ways. And oftentimes it's because they don't have the accountability that they used to have, right? Especially on The Biggest Loser. You have these trainers that are pushing you to your limits. They're helping you grow your understanding, your mental strength to know that you can do this. You can lose all the weight. You can keep good financial records. And then that accountability goes away, and now you're back in your old ways. You start falling into those habits that got you there in the first place, right? You're eating way more than you should be and a lot worse than you should be. You're having dessert rather than nutritious dinners, and it leads to a path of destruction. And it's the same way with some of these accounting clients that we see. Maybe we've worked with them to get their books in order. And then they think that they can do it on their own. And come to find out 6 months down the road, a year down the road, the problem is just as worse, if not worse than it was before, because they fixed the problem, but they didn't get to the root of the issue, right? And we want to make sure that the roots are taken care of, that the root in your financial life, in your business is healthy. And that comes by not only getting it cleaned up, not only making yourself aware of where you're at in a here and now perspective, but also advising you and pushing you towards how you can continue down this path of understanding your business and saving on tax. And it comes through habit formation. So one thing that I would recommend all business owners, all real estate investors do is form positive habits that will benefit your business financially, right? And this can come in a variety of ways, but some of the simple ones are making sure that you're keeping track of your accounting on a regular basis. I don't know what that looks like for you. For here at Better Books, we do this at least weekly and oftentimes multiple times a week, right? And the same thing is with our personal finances. My wife and I are discussing our personal finances at least 2 and often 3 times a week. And this comes from a book that many of you might have read, right? It's The Millionaire Next Door. And again, I don't agree with everything they say in that book, but I do think that there are tidbits that we can all learn from. And one of the things that stuck out to me in that book is that married couples who have built a large amount of wealth in this world have been able to do it through practices. And one of the practices that they instill is regular check-ins with your significant other on how you're performing financially. Where are you guys at? How much debt do you have? How many assets do you have? What is your equity? What is your income this week? What are your expenses this week? The business life is no different. You should be checking in with your business and your team to see how you're doing, right? You can set all the goals in the world, but if you don't have the ability to check in and see how you're doing on a performance basis from week to week, month to month, you're going to fall short every single time. And it's a lot. As business owners, as real estate investors, we have no shortage of commitments, right? You have to check on that property. You have to manage your team. You have to check in with the contractors. There's a lot of things calling for your attention. You might have a family. You might have a wife and kids. That takes up a lot of your time, a lot of your bandwidth. And so to think that you need to now set aside 30 minutes, an hour each week to look at your books and to see how you're performing, that might seem like a big call. And that's when I would encourage you to, one, do a deep dive on where is your time being spent. Are you spending a lot of time on things that don't need your attention? Maybe they can be delegated. Maybe they can be thrown out. And if you're not, if you have meticulously planned around your time and you know that your highest and best use is being done in each of those things that you're committing your time to, well, now it's time to delegate. Now it's time to bring someone in, find somebody who can help you remain accountable and check in with the performance of the business. I'm telling you, this will save you thousands and thousands of dollars, not only in taxes, but also in time spent. You will no longer have to spend hours and hours of time at the end of the year to clean up your books. Once again, remember, this is stage 2. Stage 1 was get your books cleaned up. Make sure that you have a clean financial record. Stage 2 is making sure that you can maintain that. And that comes through habit, right? So most of our goals in getting to where we want comes from habit formation. There's a couple books, Atomic Habits and The Power of Habit. Those have had a significant impact on my life. And then it's just time delegation, making sure that you are holding to the time on your calendar and organizing your calendar, getting clear on what you need to do the day before the day comes. And that way you will succeed. Checks and balances. This is a big one. Many of us think checks and balances, yeah, that has to do with the federal government, right? We have 3 forms of government, 3 branches: executive, legislative, and judicial. And they all have certain responsibilities in the operation of this country. And so you might see it for the country and understand why it happens, so that no one man can have all that power, as one rapper would say. But also, this should be done in your business. I don't care how many people are in your business, but if the same person is cutting checks and depositing checks and keeping records of the accounts, there's a good chance that money is being lost, right? Most fraud happens because people are trusting one person with too much. We recently saw this take place in the major leagues. In baseball, Los Angeles Dodgers pitcher / hitter Shohei Ohtani, highest paid baseball player to date. He's making millions of dollars. I think it's upwards of $700 million over the course of 10 years. He's getting big paychecks, and he's got a lot of money already because he was paid by the Los Angeles Angels before being traded or hired by the Dodgers. Come to find out, some of his money was missing because a translator that he hired, or the Dodgers hired, was taking money from his accounts and paying his gambling debts. And this all could have been avoided because if he had the right checks and balances, right? Can you imagine if the president of the United States was able to determine the cases of the Supreme Court, if he was able to say, that guy goes to jail, that guy goes free because I said so, we would think that that is a dictatorship. We live in a democratic republic here in the United States. And it is because we have seen through history and the founding fathers' own experiences what happens when one man has too much power. And so if you're trusting one person to keep your books, to pay the checks, to deposit the checks, to reconcile the accounts, and you're not checking in with them on a regular basis, well, I challenge you to consider, are you trusting somebody too much? And is it having a negative impact on your bottom line? Are you having less cash because of it? Are you paying too much because of it? Are you not making enough because of it? These are all things that happen as a result of having regular processes and the right checks and balances. The third part of this second stage of increasing your real estate revenue is account reconciliation. Now, that might be a big, scary word for some of you. You might hear reconciliation, you're like, I have no idea what that means, and I don't want to know what that means. And that's okay, but it's so key to your business, reconciling your accounts. And if you don't know what this means, it's basically lining up what the bank said happened to lining up what your records said happened, right? So if you're on QuickBooks and you have attached the banks to come into QuickBooks and you have somebody going in there, or maybe you're doing it, you're doing your own bookkeeping, and you're saying, I paid $5,000 for this, $7,000 for this, I made $15,000 here. That's great, but did the bank say it? And if the bank said it, yes, you now max those up through the power of reconciliation. It is a quick way to identify mistakes. I'm telling you, this can happen on a monthly basis, regardless of how great your accountant or your bookkeeper is. You need to do account reconciliation to ensure that what the bank says happened is also what the books say happened. It's a great way to identify mistakes, a great way to make sure that you're not double counting income or not counting expenses, right? Both of those things increase the taxable income, right? If you double count income, if you made $5,000, but the books say you made $10,000, that could be the difference of $1,200 worth of taxes. And that's on a very small scale. Imagine you made $50,000, but you said you made $100,000. That's quickly a difference of $12,000 in taxes at the 24% tax bracket. So it's important for you to do account reconciliation. And if you haven't done this, if you don't even know what I'm talking about, reach out to somebody. You need to do this on a regular basis. This, along with making sure that you're categorizing things properly, should be part of that process that you're implementing on a weekly, bi-weekly basis so that you're staying on top. You can monitor your performance. You can have confidence in your numbers. You know you're doing it right. Once you have the good habits, you have internal controls, you're reconciling your accounts, check in with your tax planner on a regular basis. That should be part of those habits that you're holding yourself to, right? We go back to the Biggest Loser or any personal trainer. If I go to a personal trainer, I have accountability. I'm now accountable to somebody. I'm telling them I'm going to run a marathon in 6 months, and then they help me get there. But then I no longer go to the physical trainer. Nobody's holding me accountable. I can gain 50 pounds and nobody would care. And so a tax planner helps you hold yourself accountable. You said you were going to make $50,000. Did we make $50,000? We did? Okay. Let's plan around that. Let's monitor our tax burden and consider some of these strategies that are open to us. You didn't make $50,000. Okay, maybe we can hold off on this one tax strategy that I was going to advise you on. This is what a tax planner does. He holds you accountable. He helps you make confident decisions so that you can pay less in taxes. You can have confidence in your numbers. You can travel the world. You can grow your portfolio. So this is stage 2 of the 6 stages, 6 keys to increasing your real estate revenue. You need to have internal controls and processes that will keep you on the straight and narrow, right? We're assuming you've cleaned up your books. Now that your books are clean, how do you keep them clean so that you can avoid future increased taxes, future costs of cleanup, future headaches and problems that come up by not having clean financial records? This is the Know Your Numbers REI podcast. My name is Chris McCormack. I'm a certified tax planner. I'm a CPA. I have an MBA, and we help real estate investors increase their real estate revenue, eliminate the frustrations that often come with taxes, and keep more money in their account rather than the US government's. If you have any questions on any sort of this, go ahead and find our Calendly link and find some time to meet with us and our team. We'd love to see if it's a good fit. And if you're wondering what all this is, the 6 keys to real estate revenue, there's an ebook linked in the comments that you can have access to. It is completely free, and we'd love to get it into your hands so that you can have a better grasp on your real estate business. God bless you guys. Keep moving forward.